Namaste and a very warm welcome to our channel. If you are someone who is passionate about the stock markets, eager to understand its daily pulse, and looking for insightful analysis without the jargons, then you have come to the right place. So first up, let's discuss about the markets today and do our analysis for 25th March 2025. So we have seen a strong buying momentum for 6 straight days. Nifty is closed 300 points up, moving around 1.32%, and Sensex is up by 1080 points, roughly moved 1.4%. Now the sectors that significantly contributed in this today's rally is PSU banks and the stocks in public sector enterprises. Now the question arises, why the market is continuing to rally and is there an end to this? See, what people believed the recent downfall of 15% has removed the valuation fraud, and the Nifty 50's price to earnings is come down to 18x, which previously was compared to 23x. So because of this, we see huge buying that has emerged in certain value sectors like metals, defense, and financial stocks. Now, another reason why the rally is continuing is because FIIs have turned positive. Even today, they have pumped 3056 crores and DIs have mildly taken positions for 99 crore. Now, someone would have also got about this news from SEBI. SEBI announced changes in disclosure norms for investments that are done by FPIs. Now, FPIs holding over 50,000 crores in Indian equities will require to make additional disclosures which previously required for 25,000 crores limit. So this extension of limit or doubling of limit has surely been quite positive for the FIIs. So these could be the major reasons why the market has rallied again today. So now let's understand how the market is expected to perform tomorrow. Let's do the analysis from Nifty 50. So here is the indices. So let's start with Nifty. So as you could see, there has been buying on here, 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 and then continuously for 6 straight days. And then each day we have been seeing that markets have opened up, sustained, and rallied further from there on. So now the immediate resistance for us is around 23,800 levels. This is exactly the same level where the markets had turned bearish, and then it formed a bottom here and then rallied further from start of the month of March. Now we don't know when this rally is expected to fade out, but as we have told that as long as the trend is intact, we have to continue doing the buying. So this horizontal line that you see is the lowest level for today's movement. So we have to see when the market is expected to bend. So when it bends, we will understand that could be the portion, or that could be the area where we can look out to go for shorts, or that could be the area where we could see a lot of consolidation. So what that area could be, so typically this zone. So this zone is where from 23,800 to 24,000 levels, where we would be seeing that consolidation. If that consolidation stays intact, we might further see a rally up. If that consolidation turns weak, then we might see a downfall. So let's see how the market is expected tomorrow based on the OpenAI. Now looking at the OpenAI, we see a lot of call unwindings. So here we see unwinding, here major unwinding, here, here. So these are the zones or areas where the Nifty has closed. So tomorrow, looking at the OpenAI data, definitely people who were short calls have sold off their positions, and this unwinding definitely shows that there is a lot of scope or possibility for tomorrow again the markets to open gap up and then maybe fizzle out from there. Or if this level 23,500 remains intact, then we could see buying momentum further emerge and then take down 23,600, 23,700 levels decisively. So we will wait for tomorrow based on how the market is expected to open and then sustain. If it sustains, we could further see a rally. If it fizzles out, then maybe we could be seeing back to 23,500 levels where we have a lot of support available, and maximum maybe at 24,000 levels we have resistance. And given the fact that tomorrow there is a Sensex expiry, so we can see a lot of volatility again. So let's jump onto the Sensex chart. So now on Sensex also we see a lot of buying that was seen, and this continued rally could further maybe continue even tomorrow. And the major resistance that we see is somewhere around 79,000 levels. So we are just tad 1,000 levels below. And if we see compared to like Nifty, Sensex seems to be more strong. And if this level 79,000 resistance level takes down, then we can quickly see the Sensex moving up, rallying towards 80,000 levels, where again we would be having this major resistance. Now continuously 6 straight days the markets have been positive. Tomorrow being the expiry for Sensex, we really have to see how the market is expected to move or play around. So let's see from the OpenAI perspective. Now similarly to the Nifty, we have been seeing a lot of call unwindings that has happened at the lower levels. So this is where from where the Nifty started, sorry, the Sensex started rallying, right? So that is when half of the unwinding has been done, half of the previous days y unwinding has been done here. And wherever you see the market has closed like at the money around 77,900 and then further around 78,500, call option sellers are not at all confident. They expect that any gap up open tomorrow can lead to lot of losses for them. That is when a big chunk of call unwinding has been seen here, right? So only tomorrow we will be able to understand how the market is expected to move. But here you see a strong OI additions that has happened, which is quite far for tomorrow's expiry is what we believe, like 79,000 levels. It is surely difficult to reach given the fact that Sensex each day has been rallying around 1,000 points. So tomorrow straight up to 2,000 points seems to be quite difficult. But yes, anything can be unexpected. There are no resistances in this kind of quick rally by the strong buying momentum from the FIAs. But yes, this acts as a strong resistance for Sensex, and there doesn't seem to be a lot of support. But uh, market in this mood do not seem to be coming down. So let's see how we can expect the last expiry of the financial year for Sensex is expected to play out. Moving on to Bank Nifty, compared to Nifty and Sensex, Bank Nifty seems to be very strong. So there was a immediate resistance around 50,500 levels, which was decisively taken down previous day, uh, that is on Friday, and even today. So you see a very strong bullish candle that has formed today. And we have straight up come to this level where again we have a big resistance and a gap. So let's see tomorrow if this gap gets filled. So there are quite quite positives about banking stocks. So you could see Kotak Mahindra Bank has rallied today for roughly around 4 plus percent, and then SBI has rallied around 3 plus percent, and then Axis Bank has rallied. All the big short banks have really done well. So this positivity in Bank Nifty is further expected to continue, and there are high possibilities that even this gap might get filled immediately by tomorrow or this week itself. So let's see how the OpenAI shows up. So as we had seen similar cases in Nifty, Sensex, there was a lot of unwinding for the in the money calls that we had, because there was a swift rally that was done by the banking stocks. That is when the indices has strongly moved, and it didn't give a chance for the sellers to cut down on the positions, right? So here again, maybe tomorrow Bank Nifty can expect a 300 points gap up again, somewhere around at 52,000 levels. So this is a strong resistance, and tomorrow we have to see if this 52,000 level sustains. Uh, Again, 52,000 level is where we have that gap that the Bank Nifty has to fill up. So tomorrow it is going to be very interesting for the banking stocks. And overall, since it is an expiry, if any of the sectors is expected to be taken down, it is Bank Nifty that could surely support in keeping the indices intact. So let's see tomorrow. Moving on to the last indice, FINNIFTY. What a phenomenal recovery that we have seen in FINNIFTY. So compared to any other indices, I think the fastest recovery that any index has done is FINNIFTY. So even FINNIFTY was down around 10 plus percent from the 52-week highs. But you see in just 8 to 9 sessions, all that negativity where we had here, that negativity was taken down, and we are mildly you know short of by maybe 0.5% to hit 52-week high. So this 52-week high can be taken down immediately tomorrow by a gap up open or maybe a sustained buying momentum. So we are just 150 points away from the 52-week high for FinNifty. So let's see from the OpenAI what it says. So open interest definitely has lot of uh, you know uh, shorts that are being built here at 25,000 levels. Then there, though this 24,800 odd levels where we had a huge resistance that was taken out, but still we do not see the positions, the open interest positions on 28,000 has been taken down. So could be alone for tomorrow or until this expiry, we might expect maybe the bank nifty to come down, a swift down move, given the fact that there are huge resistances at these levels. A lot of open interest from the sellers is being seen, which could surely act as a strong resistance until unless there would be um, call put sellers emerge here at this level, right? So call sellers are obviously strong at all these levels, but we have to see how tomorrow the index is expected to perform. Lastly, let's see from the um, FIIs and DIIs and client and proprietary traders, how they are placed in terms of their positions. So on index futures, FIIs are short by around 95,000 quantities. On stock futures, they are quite bullish, having positions of around 17.37 lakhs. On index options though, on call options they are long by 1.15 lakhs, which says that they are positive, and they are also long on put options that shows that they are negative. So it is roughly around 50% bullish holding, and then 50%, 15%, 15% is the bearish holding of the entire bullish quantities in call options. So let's see for proprietary traders how it is. So on index futures they are short by 17,000, roughly around 18,000 quantities or open EI. On stock futures they are again long. On index options on call they are long by around 1 lakh open interest positions, and on put options they are short. So proprietary traders are in fact bullish for, they are holding bullish positions. So we might see, since FIIs are bullish, mildly bullish, proprietary traders are quite bullish. Now looking at the clients or retailers, they are long on futures. So FIIs are short on futures, pro is short on futures, but clients are long on futures, and they are long on stock futures too, index futures and stock futures too. And on index options they are short by around 2.67 open interest positions, 2.67 lakh open interest positions. So looking at the call they are short, which is very very gruesome, and on put options they are long. Okay, so given the fact that FIIs and proprietary traders are long and clients are short, again we expect tomorrow as well the markets to open gap up and then continue the momentum from there on. Now looking at the cash buying, FIIs are have bought 3056 crores, and DIIs are have bought around 99 crores. The good part is both FIIs and DIIs are long, so possibility is high that again tomorrow we might see a gap up and that rally could further continue. So only time will tell how and when the markets are expected to maybe consolidate and maybe give a turnaround from there on. But the open interest or the derivatives data suggests that this rally is expected to further continue given the fact how the FIIs and proprietary traders are positioned with their holdings. So until tomorrow's trading, enjoy and take light positions if you are not confident. Don't jump and rush on for any of the positions uh, to take up, given the fact that tomorrow is Sensex expiry, so there could be wild moves. So until next video, thank you for staying tuned with us and follow our channel. Thanks.